Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Let's start. The euro area's international trading goods showed interesting dynamics in May 2023. Exports to the rest of the world decreased by 2.3%, while imports fell by 12.8%. This resulted in a 0.3 billion euros deficit, a considerable improvement compared to the May 2022's deficit. Additionally, extra EU exports of goods declined by 1.9%. So go to China. China's national economy displayed a positive momentum of recovery in the first half of the year. Preliminary estimates indicate that GDP reached almost 60,000 billion yuan, representing a 5.5% year-on-year increase at constant prices. This growth rate is 1 percentage point faster than that of the first quarter of 2023. In June, Germany witnessed a notable surge in inflation, with consumer prices rising by 6.4% compared to the same month last year. The G20 finance ministers and central bank governors are set to meet to address the challenges of rising economic fragmentation, slowing growth, and high inflation. The IMF is calling for joint action and agile multilateral support to assist vulnerable countries and enact necessary reforms to tackle these global issues. Going to the Netherlands now. Bankruptcies in the Netherlands have continued to rise for the third consecutive month in June. The increase in bankruptcies signals ongoing economic challenges and potential financial instability in the country. The World Bank has made several income classification changes for various countries. Guyana and American Samoa have been upgraded from upper middle to high income status, while several others have shifted between income categories due to factors such as economic growth, inflation, and population growth. Move on to Thailand's economy. It has been recovering gradually from the pandemic, with GDP growth of 2.6% in 2022. The tourism sector, along with private consumption, has been driving this recovery, and it is expected to further improve in 2023, boosting GDP growth to approximately 3.5%. Canada's unemployment rate reached its highest level in over a year, standing at 5.4% in June. U.S. industrial production experienced consecutive declines in June. However, there was a rise in manufacturing output during the second quarter. Now the world is currently facing a mounting global debt crisis, hindering sustainable development and straining nations. Developing countries are burdened with soaring public debt, limiting access to affordable financing and leading to currency devaluations and sluggish economic growth. Urgent multilateral actions are required to address this high cost of debt and provide support for countries in need. And we are going to Belgium. A remarkable 25.8% of the workforce in Belgium primarily relies on computers and smartphones for their work-related tasks. In Belgium, approximately 25.8% of the workforce spends the majority of their working using computers and smartphones. Clerical support workers and managers are particularly engaged in digital tasks, while 11.7% of the employees are consistently involved in physically demanding tasks. And moving on, Czech Republic. Consumer prices saw a 0.3% monthly increase in June, with a notable year-on-year growth of 9.7%. The rise was mainly driven by higher prices in the recreation and culture category. The FAO Food Price Index reported a decline of 1.4% in June. This ongoing downward trend has led to the index now standing 23.4% below its peak in March 2022. The decrease was primarily influenced by lower prices in sugar, vegetable oils, and cereals, while the meat price index remained stable. The FAO Cereal Price Index rose by 2.1%, mainly due to the falling prices of major cereals caused by increased supplies and ongoing harvests. And going Luxembourg, it experienced a surge in bankruptcies during the first half of 2023, with a 13% increase in bankruptcies and a significant 44% rise in job losses. This indicates a challenging economic climate in the country. The rise of cryptocurrencies poses significant tax problems for governments worldwide. Addressing the challenges of taxing cryptocurrency is essential in the changing economic landscape. The classification of crypto assets as property or currency plays a critical role, and enforcing tax principles in this domain is particularly challenging. While taxing crypto assets could generate substantial revenue, concerns about market volatility and potential evasion exist. Implementing reporting obligations and international information exchange are necessary steps. Clear, coherent, and effective tax frameworks for crypto assets are crucial for maintaining tax system integrity. And moving to Turkey, we have some news from Turkey. Turkey made a significant move by raising the special consumption tax on gasoline by 200% in a single day. This measure was taken to address the country's budget deficit resulting from increased spending after earthquakes and the presidential election. While this move is aimed at boosting the budget, it may also contribute to inflation. The tax adjustments combined with value-added tax changes are expected to significantly increase the final pump price. These budget-boosting measures were approved by Parliament to strengthen the government's finances, but the impact of a depreciating lira on prices in this import-dependent country remains a challenge. Turkey faces the task of managing its budget deficit, inflation, and the economic consequences of these tax adjustments. And now let's go to the UK. In the UK, inflation showed some relief in June, easing to 7.9%. However, it remains significantly above the target of 2%, indicating ongoing challenges for the country's economy. Again, Turkey, its consumer confidence index decreased by 5.9% in July, falling from 85.1 in June to 80.1. This decline reflects uncertainties and changing perceptions among consumers. The OECD Employment Outlook 2023 highlights tight job markets despite the global economic slowdown. Employment has recovered since the COVID-19 crisis, leading the lowest unemployment rate since the 1970s. However, real wages have been impacted by inflation in most OECD countries. The report also emphasizes the impact of artificial intelligence on the labor market, calling for policy frameworks to address AI's effects on employment. Promoting training and diversity in the AI workforce is crucial, and international cooperation is needed to support inclusive labor markets and manage AI-related risks. Going to Ukraine. Ukraine's consumer inflation slowed to 12.8% in June 2023, below the National Bank of Ukraine's forecast. Contributing factors including increased food and fuel supply, lower global commodity prices, and improved inflation and exchange rate expectations. Prices for food, non-food products, and services grew at a slower pace. Estonia's producer price index of industrial output fell by 0.4% in June 2023 compared with May, and by 1.9% compared with June of the previous year. In the first 6 months of the year, Turkey exported almost 6,000 tons of honey, generating a revenue of $16.8 million. The USA, Germany, and Israel were the main export destinations. The deputy chairman of the Eastern Black Sea Exporters Association expressed optimism about the future of honey exports, emphasizing the importance of quality control and diversifying products for increased export potential. Japan, the world's third largest economy, achieved a trade surplus for the first time in 23 months. In June, the country recorded a trade surplus of 43 billion yen, a significant milestone attributed to robust exports to the United States and reduced energy import costs. In a historic move, 138 members of the OECD G20 Inclusive Framework on Base Erosion and Profit Shifting reached an agreement on tax reforms for multinational enterprises. The outcome statement recognized significant progress in international tax reform and introduced the two-pillar solution to address tax challenges posed by the digitalization of the economy. This aims to ensure a fairer distribution of profits and taxing rights among countries with respect to multinational enterprises. The package includes a multilateral convention for profit reallocation, a framework for simplified arm's-length principle application, and a subject-to-tax rule for developing countries. The agreement also postpones digital services taxes until 2024, presenting a critical step forward in international tax cooperation. The European automobile market rebounded in June 2023, growing by an impressive 17.8% to 1 million registered units. The recovery was driven by overcoming last year's low base and overcoming vehicle component shortages. Except for Hungary, all EU markets experienced growth, with Germany leading the way at plus 24.8%. The first half of the year showed continued signs of recovery, with the new EU car registrations increasing by 17.9% to reach 1.4 million units, indicating progress from pandemic-related disruptions. Battery electric cars saw a significant growth, capturing 15% of the market and overtaking diesel for the first time. Hybrid electric cars also surged, representing 24.3% of the market. Meanwhile, petrol car sales grew by 11%, while diesel sales declined by 9.4%. And lastly, June 2023 brought significant price increases in Croatia, with restaurants and hotels and food and non-alcoholic beverages witnessing a surge of 15.7% and 14.7%, respectively. These price hikes indicate potential challenges in managing inflation and its impact on the country's economy. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.